walk to the kitchen all the time.
Awesome. Okay. So preparing for custom streaming service. This is a new setup I have.
Yeah, I noticed the mic. Those mics are good, but they catch all those, little tiny sounds.
Yeah. Yeah, I know, it's amazing. So usually when I do this, I have to actually go back and click on the live stream, but this one doesn't matter. Looks like it just kind of does it anyhow. Anyhow, we are live. Hey, everybody. How's everybody doing? What a crazy couple of days, huh? First of all, welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and attempt to break them down into bite-sized pieces. And when I can't do that, I get people who are smarter than me to come on the show, like SHehan Chandresekera, who is a registered CPA who specializes in cryptocurrency and digital assets. So, SHehan, thanks for coming on again.
Yeah, thanks for having me. I really enjoyed doing these sessions with you.
It is fun. So, first of all, I want to say right now, I'm kind of bummed out because I'm in Houston right now, and I was excited because I'm like, okay, I'm going back to Houston, and I'm gonna get together with SHehan. We're gonna have some beers. We're gonna shoot. Just gonna talk it all over. And I get here to Houston, and where is SHehan? Not in Houston. So I'm like, well, that's a bummer. So maybe next time when I get back, we'll hit it up and do something like that. Yeah,
we should definitely do like a live one when I'm in Houston, hopefully next month.
Yeah, exactly. At some really great bar or something. Anyhow, so everybody, thanks for coming on. So the whole point of this show today is we did a video yesterday and we talked about, and there was a little piece on Squawk Box, which talked about how President Joe Biden, President of the United States, President-elect Joe Biden was going to, or is proposing to not only raise the capital gains tax from 20% to 43.6%, but he also wants to do it retroactively, meaning that regardless of when it actually gets passed in Congress, it will still retroactively be applied to anybody who has sold their cryptocurrency or digital asset after April 28th, 2020, which would be unprecedented because it would never happen. So when I talked about that in yesterday's video, I said, first of all, I go first, you have to get that passed through Congress. So good luck with that. I don't care how slim a margin is. You have to get a lot of people, the majority, to actually say, we want that. Very tough to do. And then second, even these proposals that come through, you have to understand they're just proposals, first of all, and they're just a bargaining chip. And I think most people understand that you always start high and you negotiate low. And that's pretty much how it goes. So that's the first part, which we're going to talk about last. But what I really wanted to get to real quick was I want to talk about, because we're going to talk a lot about taxes, which is nobody's favorite topic. It's not your favorite topic until you owe a bunch of taxes, right, SHehan?
Or unless you have a lot of deductions that you can claim to increase your refund.
Oh, let me tell you, I do love those. I do love deductions, and I try to get as many as I possibly can. So what I want to talk about first was some other changes that are going to affect a lot of people. And even though we're talking about taxes in the United States, you have to understand that the ripple effects, XRP Army loves when I say this, the ripple effects that happen in the United States kind of go throughout the entire global community for what is happening. So when SHehan wrote this, there was 3 parts to this tweet, and we went back and forth about this. So real quick, first part, expand 1099K reporting. Businesses that receive in excess of 10K in a transaction will have reporting requirement. And this last one, which is interesting, I didn't really understand it too well, establish a global automatic exchange of information framework. So real quick, let's talk about these 3, and then we'll get into the retroactive capital gains tax.
Yeah, sure. So just to kind of set the context, these are like 3 provisions that are in the Biden's revenue proposal in 2022. So if you click my tweet, like you can see the link to that entire PDF. I think it's the tweet above the number 1. If you guys are curious about reading 140 pages, like, but what I tried to do was I kind of tweeted like 3 things that crypto holders need to know. So So starting 2022, again, if this were to be adopted, Biden is proposing that the crypto exchanges should expand on their 1099K reporting. I'm sure that you guys are familiar with the typical 1099K forms that you might have received from some exchanges. You can see the picture on the tweet. So if Biden is suggesting that these 1099K should be reporting more information, including your cash inflows, outflows, actual cash payments, purchases, and etc. Because when you provide more information to this 1099K to the IRS, IRS has more oversight into what type of transaction that you're doing, and they can accordingly, subject you for the right tax rules. So, so that's number one. And then number two, and this made a pretty big deal in the last couple of weeks. Biden is proposing that any business that receives cryptocurrency in exchange of $10,000 or more should have an additional filing obligation with the IRS, which meaning that, say that, I have an example here, say that, you went to a dealership and paid, one Bitcoin to get a car, which is, worth like, $40,000 right now. That dealership has to get your information, meaning your personal identification information, your name, address, social security number, etc., and report that information to the IRS. And this is a requirement that exists today when you pay, let's say, $40,000 in cash to the dealership. But Biden is saying that this should extend to crypto payments as well, as more people are spending crypto to buy, goods and services. So it's a little burdensome for the businesses. And by the way, this also applies to exchanges. Say, for example, you transferred $10,000 worth of crypto from Coinbase to Binance or US. Now, after this new proposed rules, Binance US has a reporting obligation where they had to report your name, address, and social security number, and how much money you transferred from Coinbase to Binance or US to the IRS. Again, they're doing this to catch people who are using crypto to evade taxes and also avoid money laundering type of activity. And then go ahead.
So Shehan, real quick before we go on, so this is fascinating, because when you take a Bitcoin, an Ethereum, whatever you want to use as far as a currency, what was great about it in the beginning was that you couldn't really track it too much. Well, you can track. It's on a public ledger, so you can track. You can track it a heck of a lot easier than cash, that's for sure. But when we take a look at cryptocurrency and actually paying for services, there was like a little bit of a gray area there between like two people. Who's going to really know? And I'm gonna press you on this. So here's a prime example. We're in Puerto Rico, right? We're looking at places to live. Found a nice little condo in a decent area, not great. Let's say that. And I was like, you know what? I had a problem with the bank, so I talked to the agent. I said, ask the guy if he'll just take Bitcoin, because if we can do that, we can circumvent with a ton of stuff. Not just circumvent, not be illegal, but to really make things a lot easier, right? And it's up to him to report those things, right? It's not up to me. It's going from my wallet to somebody else's wallet. That's legally, right? So now, if that were to happen, legally, this person would have to report it. That's what I get from it. But beforehand, there was no like legal obligation, although it is a little bit of a gray area. We'll just say that.
Yeah, so there's this couple of things. So the new guidance, if that were to be adopted, that only applies to trade or business. So in your case, you're just you're sending Bitcoin to like a personal party. So that person doesn't have any legal obligation to file this Form 8300 with the IRS, disclosing the fact that he received Bitcoin in excess of 10,000. So
that's all I want. Okay, I don't want to delve too deep in that. Sounds good.
Okay.
Got on my brain. That's great.
Okay.
So the third point. Sorry to interrupt.
Yeah. So the third point, and I think you had a question about this as well.
Yes.
So just to kind of give an idea, like the US already has established like a system to share information with other foreign jurisdictions, and If US believes that, okay, there's some bad actors, doing crypto trades and or concealing, crypto in other foreign jurisdictions, because of this information relationship arrangement, US, authorities can get that information, about those users. So, so those relationships, as I mentioned, they're already there with the banking sector and also when it comes to the crypto industry as well. Now, this proposal intends to strengthen these relationships, and they want to get these relationships to the point where that these different exchanges located overseas and in the US can automatically share those information in a more robust way. So the idea is that, say that typically what happens is, if you want to conceal your crypto assets, or if you want to evade taxes, typically what a lot of people do is they set up like a shell entity, or like a passive entity that trades in like a foreign exchange under that business name. And because of those local jurisdiction laws, those foreign exchanges are not legally, they cannot release the actual person behind those passive entities or the shell companies. Now, if this were to pass, those foreign jurisdictions will have to uncover who's actually behind those LLCs or passive activity companies and trading in those exchanges and trying to evade US taxes. So that's what this new global automatic exchange of information framework is all about.
Yeah, I mean, I get it. It makes sense. They want to just close these loopholes. Here's the thing about all that. I wonder how much do you think that they're actually losing in tax revenue? Because Shehan, I mean, you have the pulse of this. You kind of know, and then I know at some point you're pretty well sought after for different officials, we'll just say. So how much do they think that they're losing? How much do you think that governments are losing out on as far as tax revenue? Is it a ton, or is it just like, a couple billion between friends?
It's actually very significant based on some remarks made by Charles Redding, who's the IRS tax commissioner. Don't quote me on the numbers, but right now the tax gap is about, I think, 1 trillion or something like that. Again, I'm not sure if it's, don't quote me on the number, but according to him, he said that the cryptocurrencies are driving, or in other words, increasing this tax gap, because the crypto is digital in nature and you can do transactions all over the world without ever having to actually go there, because it's very digital. So that's the reason why they included that question on the page 1 of the return as well. And we have never seen that happening before. And a few years ago, this was like such a niche subject, and it made it to the Form 1040. And that was such a big deal. So in my opinion, they actually care about this subject. And as the market increases and as more people come in, the likelihood of people using crypto to evade taxes or not report things correctly increase. And right now they're putting all the infrastructure and putting all the efforts together to kind of avoid that situation.
Yeah. So when you just said that number, 1 trillion, like 3 or 4 years ago, I've been like, wow, that's a lot of money. But these days, in all honesty, I'm like, all right, 1 trillion. And it's something to be said about what is being done in the Treasury and the Fed these days. I mean, not to get it off into a tangent, but it is like, okay, it's $1 trillion. We know that. Here's what we see. We're going to go forward. So, okay, the government, that is their job. Actually, their job is really to work for us. But again, another subject. I do think it is just it's one of those things about timing, because I mean, right now, I think with the quantitative easing, they have to do something to collect that money back in, because if not, inflation and everything gets out of whack. So, okay, I understand. I get it. We'll see how that, turns about, but I just don't know. I just don't know what's going to happen. Okay. So that is on that part, as far as, that little piece. Let's move on just real quick to talk about, which I think is the elephant in the room, this little video that I shared with you yesterday, or I shared with you right now. We talked about this, and it was just interesting that I'm just going to play this real quick. Let me back up. Hopefully everybody can hear it. Hopefully I don't get copyrighted. Retroactively. And we had actually talked about this. Remember back in like a couple months ago, it was actually end of April, early May. And I had you on the show and I was like, hey man, this is what the president wants to do. Do you think they'd retroactively do anything? And you said, you're like, no, that's never been done. That's not going to happen. It's too much of a burden on the taxpayer and too much of a hit. And I was like, all right, here we go.
Percentage on a proposed new capital gains tax may very well be retroactive, guys. You ready for that? Robert Frank joins us with the latest. Robert.
Good morning, Andrew. President Biden officially calling for the largest capital gains tax increase in history to be retroactive. His budget release Friday calls for the tax hike to take effect April 28, 2021. So that was more than a month ago. If this passes and you sold stocks or a business or property after April 28th of this year, you could owe back taxes. Biden proposing to nearly double the capital gains rate from 23.8% to 43.4% for income over $1 million. Treasury also giving its first revenue projections for that capital gains increase and the elimination of the step up in basis, saying the two combined would generate about $320 billion in revenue over 10 years. They're only projecting about $1.2 billion this year from that.
Okay. So a lot to unpack. And the first thing was that we had talked about this before, and I said, you know what, it's one thing to want something, it's one thing to actually get something. So to push that through Congress is one issue. And then to actually get it all the way through is amazing in and of itself. So I don't know if that is what's going to happen, but I want you to talk about it just real quick and just see what your thoughts are, because what I thought was going to happen which is what would happen in May, which was everybody freaked out. And they said, I got to sell everything as fast as possible. And it that was one of the first couple of dips that we experienced. And I was afraid it was going to happen again. Didn't happen, which I thought was pretty amazing. We actually saw, let's see, let's take a look at some prices actually. That would probably be important. So market cap actually went up $1.7 trillion. Bitcoin's almost going to hit 38,000. For the 1 hour, 24 hours, we're up to 10% for Binance Coin. What? No, 14% for Dogecoin because of Elon Musk's tweet and then a listing over at Coinbase Pro. 14% for Polkadot, XRP 1.6. Yeah. So what do you think?
Yeah, but by the way, so we don't want to give any thoughts. So these are all proposals. So that's very important for people to know. Have an open mind, and the earlier you know this information, earlier you can react. But don't panic. So that said, so I guess the discussion is about, okay, have I seen these new laws being applied retroactively? I have not. Like I mentioned earlier, they don't introduce laws and have them apply retroactively because it's extremely burdensome for the taxpayers. Some taxpayers may end up having to pay more taxes than they actually have cash flow, and so many other administrative issues when it comes to developing software and so many other things. Yeah. Now, like you showed on CNBC, sure, I mean, there's a very, very small possibility this new capital gain tax hike could apply retroactively. But that said, it doesn't mean that we're going to see like a very it's not going to have a very large scale impact. So here's the reason. So let me share some numbers with you. So
this ought to be good. I love numbers. Okay.
By the way, so before we go to numbers, so just if you haven't been following the new tax laws and proposals, pretty much Biden is saying that he's going to increase the highest long-term capital gain tax rate from 20% to 39.6% for people who are making over $1 million or more. So that's the premise. Now, in 2018, IRS received roughly 153 million 1040 tax return. Okay. And out of those 153 million returns, only 540,000 returns had income over 1 million, which is less than 1% of the tax-paying US population. So what I'm trying to say here is that let's say that this law gets passed and it gets applied retroactively. only, you know, 500,000 very, very high net worth taxpayers going to get affected. And I'm pretty sure they would do other things to reduce their taxable income below that threshold to be subject to the existing 20% long-term capital gain tax rate anyway. So, you know, if you really look at the numbers, just don't panic, you know, just because, you know, you see the headline saying that, you know, capital gains can increase from 20% to 39.6%, because the impact of that will be for like a very, very small segment of the US taxpayers at the moment.
You know what I just thought about? I just thought about this because it's all on a progressive tax base, right? So from $1 capital gains to $999,000, you're still paying the same. I mean, I don't know what the proposal, but it's still the same thing. I'm going to guess to 20% long-term, short-term capital gains, less than a year, depends on your tax bracket. So when we hit $1 million, then that's when it comes into the 39.6%, 43.8%. But then I just thought about this, is that if that is going to affect, who's that going to affect? Well, Shehan just told us it's going to affect essentially the whales, the big money players, the people that really have a lot of their hands in the game. And those people are the ones that are really, in my personal opinion, financial opinion, not financial advice, manipulate the market. So maybe at that time, they went back and said, you know what? We got to sell as much as possible. We don't know what's going to happen. Now they're stuck. They're stuck. And they're like, hey, well, we can't really get around it. And this is what's going to happen. Now, they got an army of lawyers to figure that all out. But maybe, I'm just saying, I'm just playing devil's advocate. Maybe this can actually be a good thing because they won't start to sell, drop the market so much, and then they buy back in. Well, they'll still do stuff like that. Maybe not as much. So we'll see. Anyhow, Shehan, that was the big question. You've never seen that before. We've never had that retroactively. That is I think the big thing, which makes me kind of like amazed that actually happened.
Well, there are some retroactive laws that, you know, the Congress applies retroactively because they are beneficial for the taxpayer. For example, in 2020, some guidance came out in the middle of towards the end of 2020 saying that unemployment income is not taxable up to $10,200 per taxpayer. And that was a good thing for the taxpayer. And for those type of laws, we want that to be, you know, applied retroactively to get the tax refunds and credits, etc. But when it comes to these types of, you know, very, you know, taxpayer, you know, unfriendly laws, like I haven't seen any of these type of laws, you know, being applied retroactively in my career.
Yeah, it is something to be said. We are in unprecedented times, and that is what it is. So, Shehan, thanks for coming on, and we're going to get to some Q&A and some other stuff in a bit. But thanks for coming on and just kind of like calming everything down a little bit, just like we did last time. You know, it's not so much of a FUD type of situation, and even back then, the market did dip. But what happened? Nice little rebound, and this one this. I think if you take anything from this, I mean, look at what was said and what could potentially happen, and it didn't happen. I think that just shows a lot of strength that, frankly, is refreshing in this market. That's all I can say there. So there is that part. And before we get to the Q&A, real quick, I just want to say one thing. Every time I do anything that has like President XYZ on it, I always get a ton of downvotes. So if you're downvoting the president, that's fine. Go on another forum and do that. Don't downvote the video. The video is just here to like help calm the markets, alleviate some of the FUD, get some really smart people in here like Shehan to kind of, help. So if you downvoted it, it's trust me, Joe Biden's not going to see that, but Rob and his channel will. So if you could hit the thumbs up button, that would be great. And then also before we get to the Q&A, Shehan, talk to us real quick about, you know how on every single report, there's always talk about illicit activity. When you talk to people in certain positions, do they get that? Do they understand that this is a public ledger and that they can be tracked a lot easier than you can do with money? Or are they just like, no, that's just what it is? How do you explain to these people to get it?
Yeah, I mean it's a mixed bag, and this crypto being used for illegal activities has been like a huge I guess like a flawed fund. That's how I call it, because the data has proven that crypto is actually cash is used for more illegal activity than crypto, because cash cannot be traced whatsoever.
Cash just can't.
Yeah.
That.
So when I speak to some technical folks at the IRS and some people at the Congress, some of them they do get the fact that okay, this is a fund. Cash is used for more illegal activities than crypto, and then they get it. But there are those other officials, who are not super technical, who haven't gone into the weeds of crypto. They still believe that some of them they still believe that crypto is a scam. It's used for more illegal activities and terrorist financing, etc. So it's a mixed bag. But we'll see where the industry is heading in the next coming years, I guess.
So when you get out there, just do your best to get to their heads. Like, hey, you can track this. You can. It's an open ledger, no problems, and go from there. Well, except for like what is it? Pirate Chain and Monero, but that's not. I don't really care about that. All right, let's get to solo Q&A. I got a feeling though we're going to see a lot of political commentary, and there's two things that you never want to talk about too much: politics and religion. So we'll delve into it anyhow because we're brave. All right, here we go. Brace yourself, Shehan. Brace yourself. Impeach him. Biden is a joke. Oh, any retroactive law is against human rights. Well, Shehan had a pretty good example where it actually worked out pretty well. And let's see. CNBC is horrid. Biden's son took $1 million. Biden smokes Parmesan cheese. Interesting. Let's see. Satanic cults. Man, I got to tell you. Puerto Rico for Americans. Yeah, that's true. We've been infiltrated by communists. Oh man, is there any questions about crypto that we can get to besides we get so toxic on the other stuff? Because look, you're not gonna. I mean, this isn't the political debates here. I know everybody's got their whole views, and I mean, God bless you. But I'm just here to talk about crypto and make a profit. I'm not here to change the world. Well, I mean, in essence, kind of, as far as underserved and underbanked. Frank the Tank on Tech says, aren't capital gains tax not progressive? As in, if you make over 1 million of your capital gains taxed at the highest rate? Good question.
Yeah, so we don't know the specifics around it, but generally speaking, you're right. Capital gain taxes are not progressive taxes like your ordinary income taxes. Meaning, if you make over a certain amount, your capital gain, your entire capital gain is going to be taxed at like a flat rate. Right now, those are 0%, 15%, and the highest 20%. And how this $1 million threshold play with, capital gain taxes, we don't know the specifics yet. All we know is that he's saying that, your capital gain tax is going to go from 20%, 39.6, if you make over 1 million, US dollars. And by the way, the $1 million, we don't know if it's applied at the personal level. We don't know if it's applied per household level. We don't know the specific information yet.
So it will be interesting to see. And that's a big thing. The wording, and we can only speculate, right? If the wording is over 1 million, then why even put the wording in if it's not progressive? They said everybody gets taxed 43.6%, then that would be it. And that would be it. So we'll see what it all comes down to. Again, to not spread FUD, I do believe it's a bargaining chip to go between the two sides, Democrats and Republicans, and say, this is what we want, and it's the highest that we want. What do you got? Well, we don't want that. Let's meet in the middle, or a 70-30, 60-40 split, or whatever else. That's usually how it works in negotiations, unless you're really bad at it. Then you're just like, yeah, sure, whatever else. And that's it. And then there's a nice little post here. Why does Cardano suck so bad? Good question. So I am not for sure about that, but I will say this. Over at Dan Clips, I just had a great interview with Charlie 3, or just Charlie. And it's the Oracle service that is based on the Cardano blockchain, just like a Chainlink. And I think it's going to be pretty big. So we're looking at the Cardano ecosystem. The reason why people always say, well, no one's building on it. It's because we haven't gotten smart contracts to be rolled out with the Alonzo integration. And that, my friends, is coming in August. Looks like it is on track. So I did an interview with the team at Charlie, and you can check it out over at Dan Clips. Just type in Dan, D-A-N Clips on YouTube, and you'll find that video. On top of that, well, that's us. That's not what I'm looking for. We also did an interview with Indigo Protocol for synthetic assets. So if you're into derivatives or real world assets that can be put in the blockchain, Indigo Protocol, which is built on Cardano as well. That's another interview we just dropped today. So go ahead and check those two out. And that's all I got for Cardano. And that's about it. Let's see. From Australia, best exchange for alts in New York. I don't know. Shehan, you got anything on that one?
I'm sorry, what was the question?
It says, what's the best exchange for altcoins in New York?
I'm not sure. I don't know
either. Hey, you know what? Here's a good question. I never ask you about, because we always ask you accounting questions, which, you know, is fun. But what's in your portfolio? Just give us a couple. What do you like in your portfolio, Shehan? What are you into?
Yeah, I would say it's mostly consists of, you know, Bitcoin and then Ethereum, Cardano, Terra, a little bit of Tezos, and some other random coins from 2017, like Tron and like some airdrops and etc. Yeah.
How dare you? Tron's supposed to be going to the moon soon because Justin Sun said it, so it's going to happen. Nice.
He's been saying it since 2017, but at least I haven't lost anything because I got it in 2017. But yeah.
Nice. So here's a great question from Taking Notes. He says, great, taking notes, thank you. Says, can I get away with cashing out 500,000 and keeping the rest in crypto and only get taxed 20%? Crypto trader, good for that. So that's actually a two-parter. So really this comes down to how it's written. Shehan, you want to take this one?
Yeah, so I'll answer the tax piece. So if you were to cash out 500K, hopefully you're referring to 500K being your capital gains. Yeah, I mean, essentially you would need to keep set aside actually 23.8% for taxes, 20% being the highest long-term capital gain tax rate. And you're going to need to set aside 3.8% for net investment income tax. And then the remainder, like you can do whatever you like with that money. Yeah, that's how the taxes work. Yeah.
Lambos. And the second part here, crypto trader, good for that. Well, I'll take crypto trader. CryptoTrader.tax, friends of the show. I like them myself. Shehan uses a different one. Which one is it, Shehan?
It's cointracker.io.
CoinTracker, also another good one, correct?
Yeah. There are a bunch of good ones. So pick the one that fits you.
Hey, and also one thing about that one, CoinTracker, can't you track your portfolio too? And then it kind of and then you have like API integrations?
Correct. It does track your portfolio, and it also helps you with tax loss harvesting, and it shows kind of like the loss that you can sell to kind of save on taxes. Perfect.
All right. So check both those out. There was one, we just missed it. Walter Heth, thank you. Says, was curious if crypto tax is a FIFO only, or does it try to find the crypto you bought at the highest price to minimize the amount of capital gains? Very technical question.
Yeah, I mean, I think I can speak on behalf of CoinTracker. So CoinTracker optimizes your taxes for HIFO, highest in first out. That's what you should be using because that results in the least amount of taxes. And then a 5% for first in first out. So not super advantageous, but it could be advantageous in certain situations. So yeah, I mean, I guess when you use a crypto tax tool, make sure they have HIFO as an accounting method because that's going to give you the least amount of taxes.
Perfect. Yeah. So for that one, definitely. All right. What else we got here? Tron is doo-doo. Well, all righty. Let's see. Wow. Where do we go here? Plus 100, Dan. Thanks. Cardano's lame. Hold your crypto. The problem with selling 500,000 in 1 year, the crypto market will crash after. You'll have to wait 3 years for the rest of the crypto to rise again. That is what I think. I think we're still in these 4-year cycles. A lot of people disagree with me. They think that the institutions are here to save everybody, and they're going to keep the dream alive, and we're not going to see a crypto winter. I don't believe that. and I have my own exit strategy. That's just my strategy. And my goals are not your goals. Just remember that. And let's see. Oh, there's a good Scott Hawkins. Would it be worth prolonging your capital gains with like assets, loans, and liquidate under the limit every year to pay less in taxes? Interesting.
Yeah, I mean, this is something that you should be doing after, sitting down with like a qualified accountant who can kind of actually plan your taxes. Yeah, I mean, essentially taking a loan against your appreciated assets, crypto assets is a great way because you get liquidity, cash liquidity without triggering a taxable event. But the problem is you got to figure out a way to invest that cash in crypto or in another type of asset to have a better, yield. So you can pay off the loan and still make a profit at the end of the day.
Yeah, because I mean, you got to make that money work for you, right? If it just sits around, what is it going to do? It's just going to inflate 2%. And then you're like, well, what happened? Well, I didn't do anything with it. Well, you got to get assets, hard assets, whatever those are, whatever you want into. Hey, Shehan, I know you have your own service. Obviously CPA, but do you do anything like that as far as like talking about investment strategies on top of what you do? Or do you have partners that do that? Or how does it work with you guys?
Yeah, so I think some of those things fall under consulting type of engagements. I consult people on, about, certain type of things that are not necessarily investment advice because legally, unless you're registered with the FINRA and unless you're a financial advisor, you cannot provide any, investment advice. Even registered financial advisors cannot provide investment advice in terms of crypto because crypto is not like a regulated asset. But yeah, for tax type of consulting or general, like, business consulting or how to structure certain things, that's something that definitely I can help. Yeah.
Okay. Yeah. And then, so if you're looking for how to find Shehan, first of all, there will be, let me share this real quick. First of all, it's just at the Crypto CPA for Twitter. And then when you go there, you can also find Shehan's website and get a hold of him, which is pretty nice. Everything's right there, right? And you can set up any type of, well, first of all, onboarding questionnaire and all those things, tax preparation consultation, which is probably a good time to do this now, as opposed to like when everybody else does it, which is like on April 1st. Shehan, help me before I have to pay my taxes on April 15th. So if you're looking to do these things, this would probably be a pretty decent time to get in for that. That was a shameless plug I just threw for Shehan.
Yeah,
but
I appreciate
well warranted. It's well warranted, man. You do great work. Okay. Now let's see what else we got. And I think, how dare you? You have stolen my crypto gains. HODL and take loans in your crypto, pay taxes, let yield cash flow pay off the loan. And you know what? There was one thing that someone said to me I thought was pretty sharp. And this is something that I think will relate to you, which was about instead of cashing out for your crypto, to fiat, there was two ways to do it as far as like minimizing taxes, which is whatever your tax bracket is. Let's say that you hit, 75,000 and then you go up 99,000 and you go up, whatever else it is. What they said they would do is just like, well, I just stopped working and then I would just take out $74,000 per year and just cash it out and then just keep it at that level. And it would be like the same thing. I wouldn't have to work. I could travel the world. I'm like, that's not a bad idea, right? And then on top of that, somebody else said, you know what I'm going to do is I'm just going to take my crypto, not cash out, but I'm going to let it work for me. And I'm going to stake it on the different staking options that I can find. Also, I'm going to keep it in exchanges and just gain the yield. Now, here's the big question, Shehan. This would also come down to taxes as well. So when you're staking, how does the government work with that?
Yeah, at the moment, like whenever you earn those staking rewards, like that creates a taxable event for you, and you got to pay taxes based on the value of the coins at the time you receive it. And the government doesn't really care whether you receive cash or not. You still got to pay taxes. So that's kind of bad, but it's passive income. So if you have a huge amount of like crypto that creates you like, I don't know, $10,000-$20,000 a month, I would take it. It's a passive income. It's money coming in your way without you doing anything.
See, I see me and you see, this is the problem I see. So passive income, you get 10,000. Let's say you make 500 ADA every month from your staking, right? Everything's great. And then at that point you're in the bull run and then ADA goes up to which I'm going to talk about as my price prediction, I think it can go up to $10 per ADA. Okay. And then, so you get that in, let's say December, and then January, let's say it duplicates the 2017, 2018 run. It goes from $10 to $2, and then it just stays there for 3 years. Now, what the government is saying is like, hey, you got 500 of ADA at $10. That's $5,000. You're going to owe us, if it's capital gains or whatever else, 37%. You're like, whoa, wait. It went from $10, now it's only $2, and it's been like that for the last couple of years, or this last year. So I didn't cash out for cash. Now, if I want to do that, you know what I mean? It's going to be a difficult situation. So what do you think about that? These types of talking points?
Yeah, I mean, there's pros and cons. I think, so in your example, I mean, if you really want to kind of take a tax benefit for your, loss in, drop in value, you can sell them and realize the loss. And on the other hand, what the way I'm seeing is, I'm optimistic. So, and I am staking Cardano, and let's say right now it's at $2, just to make things simple. So I am reporting my taxes based on the $2 valuation for that coin. Yeah. And in the future, I know it's going to go up, or it could apply to other coins as well. So I'm locking in my tax bill based on the value that is today. And it could end up being $10, $100 in the next 5 to 6 years. And I don't have to pay taxes, even if it goes up to $10,000 a coin, until the moment, that I sell it. So there's two ways to see it.
Yeah. Cause that's what concerns me is like, cause when you gain those ADA, you haven't sold anything. You just gain the ADA itself, the Cardano. So you haven't sold anything yet, but they're saying you owe us, even though you haven't sold anything. Well, I haven't sold anything because I think it's going to go up. And then let's say it does or doesn't. It's a sticky situation. And that's another thing about the taxes for this year. But that's for you to talk to the big guys and have them figure that out. Hopefully they can. All right, a couple more questions and we'll get out of here. I don't want to keep Shehan all night, for Pete's sakes. He's got stuff to do. Let's see. Hunter Biden, taxation is a democratic way. You're darn right. What a mess. What about an LLC? That'd be a tough one. And then let's see. Shiba Inu, StormX. I'm George. We're all George. Everybody's George. Cryptos are us. Great guy. That's it. That's all we got. And then, of course, there's a lot of things about everybody hates Joe Biden. Sure. Everybody hates the president. Let's just say what it is. Anyhow, Shehan, thank you for coming on again to help us alleviate the FUD. So just as a quick recap again, we talked about what the proposed plan is from Presidente Joe Biden and what he's going to do as far as taxes. There was 3 parts to it. And what Shehan was saying is that, yes, first of all, $10,000 must be reported by the actual business. There's going to be more of an interoperability between these huge organizations. And the first one, I forgot what we were talking about that one. And then
1099Ks.
That's right. The 1099K, which is going to be reported. I think it went from, what was it? $6,000, $8,000 down to like $600 for reporting.
Yeah, $20,000 in gross volume and 200 transactions to the lower $600 transaction limit. $600 volume, $600 value. Just a value limit. Yes.
Unbelievable. And then we talked about this other plan about retroactively going back to tax people for, again, Joe Biden capital gains tax. And again, we alleviate some of the FUD. It doesn't matter what you propose. You have to actually get it passed. Good luck with that. Retroactively, again, a very tough sell. But I think it might actually be a good thing for all these whales who try to sell too much because they're like, hey, I got to get this off the books as soon as possible. Now you can't do that because it's going to be retroactively. We'll see. Shehan, thanks again. I appreciate it. Any last words of wisdom for everybody who is in the cryptocurrency space?
Thank you for having me. I guess my last words are just don't panic. Just have like a good solid investment thesis that fits your needs. Like Dan says, your goals are different from your neighbor, your friend, and mine as well. Just stick to it. Expand your time horizon for investment, and all of a sudden you're going to look like a genius. So
everybody looks like a genius in a couple of years. All your friends will be like, I know I made fun of you, but I'm really sorry. How do I get that new thing called Bitcoin? So Go right ahead. Shehan, thanks for stopping by. That is it. Also, don't forget, if you can go over there at Dan Clips, go check out those 2 videos, which you talked about the Cardano Oracle, also synthetic assets being built on Cardano, the Indigo protocol. And that's it for today. So if you like the video, not about the political argument, hit a thumbs up. That'd be great. Subscribe, and we'll see you